Basically, when a banking system is dominated by a small number of very big banks, they tend to lend to big borrowers, and the biggest borrowers are financial speculators. And the problem then is you get boom bust cycles, an asset bubble as the banks lend, and when they lend, they create money, you see, and so create more money, put it in asset markets, asset boom. It's not sustainable. As soon as this speculative lending slows, you get a bust, and then you have a bust banking system. So this financial instability comes from having from relying too much on big banks. If we now do the opposite and create not-for-profit local banks, we can get local job creation. Small firms will thrive. Small firms create more jobs for every krona invested than a large firm. And you get more stability because then you don't get these financial bubbles and busts and banking crises anymore. And also the local banks can make the decisions on who should get the new loans, which is new money, newly created money, for what purposes. And when you have it on a community level, small scale, I think mostly people will go for something that's good for the community, good for the environment, and so you get also much more sustainable projects that improve quality of life, standard of living, and the environment. Two things. Number one, issue a regulation that says that the big banks are not allowed to lend any money for transactions that do not contribute to GDP. And number two, give money to help local communities set up their local independent community banks.